Hello traders, and welcome to the Stock Goodies Chart School. The average directional index, or ADX, and the minus directional indicator, which is also known as minus DI, and the plus directional indicator, also known as plus DI, represents a group of directional movement indicators that form a trading system developed by Wells Wilder and presented in his 1978 book, New Concepts in Technical Trading Systems. This book also included details on the average true range, or ATR, the parabolic SAR system, and the RSI. And all of these were developed before the computer age, and Wilder's indicators are incredibly detailed in their calculation and have withstood the test of time. Now let's go ahead and load up the ADX on this chart for WPX here on StockCharts.com. If you scroll down to the bottom, under Indicators, you will notice that there are two instances of the ADX. Okay, this first one just shows the ADX. And what it does is it shows strength of a trend. It does not indicate which way the trend is. Anything over 20 means a stock is trending strongly. Okay, but let's go back and load the full ADX here, which is called the W/ADX directional movement. This will include the green and red line, which is the green line is the DI plus right here. The red line is the DI minus right there. And the ADX is the black line right there, set at a period of 14, which is the standard setting. And I recommend keeping this setting because the math on this particular indicator is extremely complicated, and it's set at 14 for a reason. Okay, now let's talk about the DI plus and the DI minus. Okay, as I mentioned, the ADX itself only determines the strength of a trend. It does not say which direction. That's the job of the DI plus and the DI minus. Now right here there is a crossover where the green DI plus crosses up through the down ticking DI minus, the red line right here. And many consider that to be a buy signal. And if you look at the chart, that would have been a good buy signal. So the direction of the trend is all about the DI plus, which is up ticking. The DI minus is down ticking. Okay. Now let's take a look at the high. On this chart, this day was where it topped out. And at the same time, the DI plus started a downtrend and the DI minus started an uptrend. And they started pinching together real close here. Okay. So when the DI plus starts down and the DI minus starts up, the stock will be in a downtrend, which it is. Okay, but this whole time, the DI plus remained above the DI minus. There were no other crossovers. Now I'm going to get into the annotate chart section where I can put lines on this chart and show you exactly how this works on a few different charts. Let's take a look at some of the buy signals the DIs have given on this chart. Okay, we're looking for the DI plus below the red DI minus and crossing up through it. Okay, here's the first one, right about there. Didn't work so good. The next instance is right here. The green DI plus is below the red DI minus, and it crosses up through it right here. That's a buy signal. Let me move that a little bit to the left, where the actual crossover is, right there. Okay, and the stock went up very nicely from about $15 to $17. The next time it happens is right here. And the stock makes another move from $15 to $18. A very bullish buy signal. This is the next buy signal the DIs gave. And this time it ran from $15 to $21. So you can see that the buy signals work pretty good here. All right. And I don't think there was any more. It might have crossed right here. It's really kind of clustered up. But right here, the DI plus started going up and diverging from the down-ticking DI minus. So let's just go ahead and pick that spot right there. The stock moved from $19 to almost $20. Okay, so whenever you see the DI plus diverging from the down-ticking DI minus, that's bullish. So let's go ahead and look at some of the sell signals this has given. Okay, the DI minus crossed down through the DI plus right here. And the stock began a downtrend right here. There was no actual signal, no crossover on this downtrend other than the DI plus started down and the DI minus started up. Same thing here. No actual crossover because it had been such a strong trend that they weren't even close enough to cross. So when you see a peak in the DI plus where it starts down and a valley on the DI minus where it starts up, that could be considered a pretty good sell signal. And the stock goes down. That's where it started down. Same thing right here. The DI plus starts down, the DI minus starts up right about at this point, and that was also a top where the stock took a pretty good fall. The same thing happened here. This was a huge peak after a huge strong rally. The ADX is showing it is a very strong rally, well above the 20 line, which is right here. This is where it crossed the 20 line. Same thing here. DI plus is at it's up, but headed down. DI minus starts pinching together with it. So this should be the beginning of another downtrend, which it is. Okay, so you can see how the crossovers are important, either bullish or bearish, and they work quite often. And the peaks and valleys are also very important for calling tops. Now, while calculations for the DIs are quite complex, interpretation is pretty straightforward, and successful implementation takes a lot of practice. Because DI plus and DI minus crossovers are quite frequent, and chartists need to look elsewhere for confirmation help. Volume-based indicators, basic trend analysis, and chart patterns can help distinguish between strong crossover signals from weak crossover signals. Now let's take a look at this chart here of IGT. First of all, this is a buy signal right here. And it worked. The stock ran from 1350 to about 1550 in a matter of a couple of weeks. Then there's a lot of whipsawing through this area. A couple of 3, 4, a number of different crossovers. Okay, but right here, chart pattern. Here's a double bottom, shaped like a W. Okay, the breakout was right here, and then it pulled back a little and then finally broke out. Okay, but right here was the DI crossover that signaled the DI plus up through the DI minus, right as the chart was breaking out above the resistance here at the neckline of the double bottom chart pattern. Okay, so that's what they mean by, chart patterns, volume. Volume wasn't real big on that breakout. Got a big red spike, sent it down, but then a lot of green days, okay, that started sending it up. Here's where it really took off on big volume. A little bit choppy there. Here's another DI plus crossing up through the DI minus. Stock ran from about $17 to almost $19 on that particular crossover. And as you can see, the DI plus started moving up sharply while the DI minus started moving down sharply. And in this case, the chart pattern was a bullish cup and There's the handle, which is a bullish chart pattern. And right here, the stock broke above the neckline resistance between the cup and handle and broke out on big volume. So that's what they're saying about look for volume, look for a chart pattern, and that confirms the DI plus crossing up through the DI minus.